Hello, today is Thursday, November 11th. I'm Tracy Anderson, and let's look at some markets. We're well into the holiday season. Hopefully, everyone has their turkeys in hand and ready for the feast. Now, on to our look at a few markets, and I'm going to start with grains this week because this week market is getting tighter. USDA estimates the carryover from last year's worldwide is the lowest since 2008. Russia has imposed an export tax to help keep their product in country. Australia is in the midst of their harvest and experiencing too much rain. All this is pushing wheat prices higher and availability is not great. Domestic supplies are tight. Best advice if you're a big flour user is keep ahead of your demand. Looking at corn, and the harvest is about 85% complete. Corn closed yesterday at $5.79, up from $5.74 last week. Still all encouraging news for this crop. Soy harvest is about 90% complete. Pricing is holding steady, so we may have the worst over for soy, but not yet ready for a return to normal. Now look at beef, and we are in an upward movement on the beef market. I think with ribeyes and tenderloins already so high pretty much all year, I think they will increase, but I'm not seeing big moves up. I do see loins moving higher as retailers are trying to feature something a little more economical. Still, if you want to offer middle meats, loins are the better value at this time of year. Rounds and chucks are pretty steady, thin meats are moving higher, and grounds have some more upside to them as well. If we look at pork, and bellies closed at $156, down from last week, $157. Still, it's time to buy bacon. Traditionally, December brings the lowest prices on bellies for the year, but I don't see that much more downside to this market. Pork belly stocks are down 47% from last year. There just isn't that much product to support moving lower, in addition to the never-ending labor issues. Loins and butts continue to be a good value, and hams still have some holiday movement left. So, menu pork. All right, let's look at chicken, and again moving lower, even wings. For a few weeks out of the year, chicken is not the primary poultry protein. Pricing is still historically high, but it's coming down. Production is continuing at a pretty good clip, keeping product available. Randoms have some more room lower, at least in the short term. And finally, dairy, another week, another big move in dairy. A few weeks ago, we were upside down with the barrel at a premium to the block. This is completely turned around with block at a 21 cent a pound premium over the barrel. So I think we will have more volatility in dairy for the next couple weeks. Hopefully we do see our traditional declining market come December. Okay, with that, I'm done. Thanks for listening, and let's do it again next week.